Good evening, folks. This is Andy Pedraza with Special Effects Academy on the start of the week session for April 7th of 2019. We'll get started with our usual agenda. We'll take a look at the prior week, our currency strength meter for the past month and past 7 days, our fundamental announcement calendar for the week, a quick review of the daily charts, any setups we see in progress, and a few words in conclusion. We've set up our 3 different accounts, long-term, intermediate, and short-term. The details on how to connect to those accounts have either been sent out or are forthcoming. Only the long-term ledger instructions have yet to be sent out. There are no long-term trades open, or indeed have been opened this fiscal year, which started first at the beginning of this month, so that's blank. Same applies to the intermediate term ledger. We've only just set it up, so trading will begin this week, both on the intermediate and the long-term account, so that one is blank as well. And last but not least, our short-term ledger. We did have a down week with a deficit of 6.87% on a very sideways week, just went in both directions and did catch us on more trades losing than winning. This, of course, is just about par for the course on short-term trading. We will have some down weeks, and then we will, at least hopefully have some weeks that make up for the deficits along the way. So these are the results for the week. We did open 24 trades, of which 11 were winners, 13 were losers, a collective loss weighted pip of 300 plus pips negative, for a downtick, as I said, of 6.87% for the week. Notes and opportunities for improvement. As we mentioned, it was a very sideways week with a lot of whipsawing, especially from the pound pairs as the Brexit scenarios continue to play out, moving these pairs in both directions pretty much in the same day. So again, when we have a whipsawing market, that is definitely not conducive to short-term trading. But as I said, these are normal, I guess, the normal vagaries of short-term trading, so nothing out of the ordinary there. And the intermediate and long-term trading, as I said, are being set up, so those will be kicking off this week. Looking at our relative strength meter for the week that just ended, as well as the past 30 days, volatility on the monthly has gone down to a more normal level. We're looking at about 2.5% volatility for the month, and about 1.35% for the week that just ended. Noteworthy, in the last 30 days, we can see that the clear winner has been the Australian dollar, has done a pretty nice recovery against everything else out there, followed quite closely by the Swiss pound, the Swiss franc, I'm sorry, which did improve against everybody except the Australian dollar. On other news, the CAD continued to benefit from the oil recovery, and we'll be looking at that oil chart in once we get to our charting. But the Canadian dollar did improve against everybody except the 2 big winners, the Australian and the Swiss. And the pound also had a bit of an interesting month in that it did recover from most of the lows, though the past couple of weeks have not been particularly good for the pound. But the pound did gain against everybody except, again, the 2 big winners, the Australian and the Swiss franc. The euro was pretty middle of the pack for the month. The yen did lose ground against pretty much everybody, as did the kiwi. The dollar was middle of the pack, and in the metals we have silver being the clear loser, followed very closely by gold. For the week that just ended, it was a very sideways week, with the clear loser being the New Zealand dollar. It did lose ground against everybody else, followed very closely by the Japanese yen, also losing ground against everybody except the kiwi. Dollar, the clear winner for the week, and the pound didn't fare as badly. This was, as I said, a reasonably flat week, there wasn't a whole lot of movement from the beginning of the week to the end once you compare, but there was a lot of whiplash and roller coastering throughout the week. So that's pretty much what happened for the last 7 days and the last 30. Fundamental announcements for this week that's just coming out. We have the European Central Bank interest rate decision coming out on Wednesday early morning, 7:45 a.m. Eastern. We will be trading that one live. So we'll be opening up the trading room around, I'm going to say 7:15, half an hour before that. We've got the Consumer Price Index excluding food coming out of the U.S. That's say morning. That one will not be trading live though, but sometimes it's a good mover. But I've pretty much I don't trade the CPIs. They when they do move, it's not very common. So every now and then you get that big surprise, but it's not not something I would stay up for. European Council meeting on that same Wednesday at noon my time, and more importantly, and that we will be trading the FOMC minutes coming out of the Fed at 2 p.m. We already have a trading session for 2 p.m. that day, so we will be opening up a little bit early just to get a head start on the festivities, probably no more than 15 minutes before these minutes are released. We'll wait for the actual release, trade that, and then carry on with our regular 2 p.m. session. And last but not least, we still have the current Brexit deadline being the end of day for April 11th. So Friday, April 12th, technically the UK exits the European Union. However, Theresa May has formally asked for yet another extension that would go into June of this year. And she is either in Brussels right now or traveling to Brussels to formally request that from the European Union. So by the time Thursday rolls around, that Brexit deadline will probably no longer be valid. But we're leaving it on the calendar. We'll see how that plays out throughout the week and basically take it from there. Moving on to the charts and starting with oil, we can see that oil has had just another brilliant week, and I'm waiting for the actual screen to update. There we go. So oil has not only had a brilliant week, it's been having a brilliant year. Since that low back mid-December, it's done nothing but go up, go up, go up, and it is getting very close to my I'm going to say medium-term target of 64.25. It's within spitting distance right now of the target, off by about $1. And though we have seen Canadian improvement as a result, we haven't seen the improvement that we would expect from this type of oil move. So the Canadian dollar has been a little bit of a slacker. It's been lagging behind oil, and that can continue. So we're looking for a steep correction in the Canadian dollar across all Canadian pairs. So we'll be trading that very likely in either the intermediate or long-term accounts. So that is coming. We'll just have to look for a good entry point for those trades. Moving on to the currencies, taking a look at the euro dollar, it continues traveling on a downward channel, though it has not been very aggressive in the drop. So we can see that it's been mostly sideways since back in November, at least that level of support around the 125.30 something, I'm sorry, 112.55 has held more often than not. It's only now being consistently pierced, and now price action is trading below that level of support. So we'll see if that means that we're going to have a nice bearish market out of the euro dollar. There's too many variables there for us to try and predict any of that. But if we get any valid triggers on an intermediate or long-term short of the euro dollar, we will be taking them. Moving on to the pound dollar, continues to be in an uptrend since it bottomed out in December of last year, but we can see that it's gone very sideways from February through today, and indeed it was a nicely bearish week where the dollar regained some ground against the pound. It is lying at a significant level of support resistance around the 130.50, I'm going to say, is where that red line is placed. Obviously, this one is not going to be obeying the technicals as much as it is going to be reacting to the fundamentals. And that's going to be the case for all of the pound pairs until all these Brexit scenarios play out and we have a finalization of Brexit, either with the UK leaving the EU or calling it off and deciding to stay. Either way, there's going to be some pretty good movements out of pound pairs, but without knowing exactly how everything is going to end up, there is no point in getting into any of these trades. So we'll be getting in them, but it will be waiting on any fundamental announcements, news that comes out that give us an inkling of which direction pound strength or pound weakness this is going to take, and of course reacting to price action itself. So we will be heavily trading the pound, but it will be done very carefully. USD/JPY also continues in an uptrend, though very sideways action from February through today. Currently heading up. It is just underneath a significant level of resistance, as well as another one indicated by that downward sloping trend line right above the horizontal. So what that means is that the USD/JPY can indeed go in either direction. It's in a wedge right now. So we would be waiting on a breakout in either direction to trade it for a longer term move. USD Canadian, this is one where I am very hopeful that the improvement in oil prices means that we're going to have a steep drop, and it might even go all the way down to the bottom of this chart around the 127, so about 600 pips worth of movement. But again, we'll be waiting for a trigger to actually hit before we get into any of these trades. The secret here is not to try to predict where it's going to go, but wait for it to start moving and then simply tag along. So for now, this is another one that's in a wedge, but my personal bias is that it's going to break out towards the bottom at some point and give us a nice opportunity for at least 500 pips worth of action. Again, all of this highly dependent on what oil price does in the coming weeks. USD Swiss is another pair that's overdue for a trip towards the bottom, but of course it's going to be doing that on its own schedule and not mine. So this is another one where we will be trading it as soon as we get a valid trigger in either direction. Again, my bias is that this one is going to be heading down, but we don't trade biases, we trade price action. So I'm waiting for something to happen on this pair. Aussie dollar, after a very steep drop throughout the course of last year, so the entire 2018 was the Aussie dollar dropping. It has finally stabilized. It seems to have found a bottom around the 0.70, which is that bottom red line on your screen. It's been very reluctant to cross that. That could mean one of two things. It's waiting for some even worse news to finally pierce that and make a significant drop, or it simply played itself out. So it will continue trading sideways until there's some reason for it to start heading back in the opposite direction. There's no way to tell if we've reached the lower limit, the bottom of the market or not, until, of course, it no longer is the bottom and it starts heading back up. So for now, this one, we're simply going to be monitoring it. There is no opportunity that I see for any intermediate or long-term trading until we see a breakout in either direction. That doesn't mean that we can't get profit out of this one via short-term trading, but that will be probably the only way we're going to be trading the Aussie dollar. Again, unless something happens to the dollar or to the Australian dollar that makes us revise that. Kiwi dollar, another sideways pair, though it did have a very nice recovery from October through November of last year, nicely reversed the trend and started heading back up, but it did find the ceiling around the 60, what is that, 69, 65, let's call it, so a little bit under 70 to the 70 cents to the Kiwi dollar. And since then, it has been trading in a rather wide, I'm going to say that's about 250 pips worth of a sideways channel between where it is right now and the top of the chart. So this is another one that has gone sideways, and we're waiting on anything to make it break out in either direction. It could just as easily go up as it could go down. On as opposed to the Australian dollar, I would trade this one up towards the top of that channel if it starts moving in that direction for an intermediate trade. And I would, of course, also trade it towards the bottom. So really waiting for price action to determine which direction our entry is going to be in. Aussie Canadian, a Canadian pair. So obviously I'm looking at Canadian strength based on the improving oil prices. So I am waiting for a good opportunity to trade this one towards the bottom of the chart and even deeper. But again, waiting for that to actually start happening before we jump in. Euro Swiss in a descending channel, a very shallow channel. It's not dropping very quickly, but dropping nonetheless. It did give us a lower low on the daily than it's had in the entire visible area of this chart. Right now, it's very much in the middle of the channel. So again, it could go in either direction, and we would be waiting on something in price action to tell us which way to trade it. I don't see an opportunity for a long-term trade out of this one in the coming weeks unless something fundamentally changes. But that doesn't mean we can't trade it on smaller time frames for either intermediate or short-term plays, depending on what the technicals tell us at any given time. Of course, with the euro pairs, we're always going to be vulnerable to whatever's coming out of Brexit until that finishes playing out. So we'll be keeping an eye on this one, but I'm in no rush to trade it. Euro pound, another one highly vulnerable to the whole Brexit scenarios. It has bottomed out. We have a new bottom at the 84.75, which is the bottom red line. It is in a wedge right now between that bottom level of support and that descending trend line. I would trade this in either direction, though very carefully. We'll have to wait and see what happens with Brexit. This one is doubly vulnerable since both the euro and the pound are very, very much going to be feeling the fallout of anything that goes awry with Brexit. Euro JPY has been very flat, and actually I've not been trading this one for quite a while because it has been too flat. The only thing that is probably going to wake the Euro JPY up is Brexit, as the yen is a safe haven currency for the Europeans. But again, we'll wait for that to actually happen before trading it. It is in a wedge. So if it breaks out of the bottom or out of the top, we will take that trade. Also, if it does a complete cross of the Ichimoku cloud, right now it's very much in the middle of it, we will also take that as a potential trigger. But right now it's in no man's land. Euro Canadian, yet another Canadian pair, and in this case, vulnerable as well to a Brexit scenario. So this one could be a very good mover. I think we took a bit of profit last week on this one before it started retracing, but I would also expect this one to break out towards the bottom if we continue seeing the improvement in oil, and more especially if anything starts going backwards on Brexit, the euro being vulnerable, this one could very much gain a lot of speed heading towards the bottom. So high on my radar, but it's not ready to be traded long term yet. Pound JPY, yet another one that's waiting on Brexit. This one is actually looking very nice for a short. It's very near the top of its most recent range. Unless something incredible and unpredictable and unforeseen should happen, I don't see a lot of upside for the pound. So this is a pair that's simply waiting for a very sharp drop, which would take it all the way down for upwards of 1,500 pips is the distance from where it is right now. So definitely a candidate for a long-term trade, but I want to wait for Brexit to play out before we jump in, or at least for something in Brexit to happen that has any sticking power, because we've been going from one extension to another extension, one inconclusive vote to another inconclusive vote. Nothing has happened of any significance since the actual Brexit vote back in 2016. So we're going on 3 years where there's been a lot of talk, but nothing has actually been decided. And the few things that have been decided, such as the UK is going to leave the European Union on the 29th of March, have been postponed. So that uncertainty has not let the market properly react to Brexit. But this is one of the key pairs, with the pound, of course, being highly vulnerable to Brexit because it's in the middle of it, and the Japanese yen being the safe haven currency for Europe. This pair could be the big mover in the next month or three. So also high on the radar, but we're waiting for something to happen to trigger our trade. Aussie JPY, another very flat pair, traveling at the bottom of a very sideways channel, though it did break out with that very steep drop back in the beginning of the year. It quickly returned to its prior level and has continued trending sideways along the bottom of its channel since then. So really not giving us any opportunities. We do have, and I keep these indicators around for a reason, we do have the Williams %R is at the top of this range and starting to hook down. That could be a heads up that we're going to be seeing a drop in the near future, or of course that Williams could just remain at the top for a while. If we do see the Williams dropping consistently, we would cautiously take a short position on the Aussie JPY. I don't see any potential for a long trade on this pair. If anything, I think it's where it is for a reason, and it may be too high where it is. So we're going to have a correction towards the bottom. But again, we're going to wait for it to actually happen before we jump into it. Euro New Zealand, another one that was nicely dropping, has established a trend line, but it started to go sideways on us around the beginning of the year. Though it has managed to fulfill my expectation of breaking past that prior low from November, it promptly went back up. So it did break the trend line, but it didn't stay underneath it for even a single daily candle. It just immediately went back up. Not only that, it went back up with a vengeance, just undoing weeks of drop in one day, and has indeed made a higher high since then, and it's in the middle of the Ichimoku cloud. I'm still very bearish on this pair. I think it has a good potential to go back down far beyond that prior low. But I want to see that that movement begin, even if we give up a few pips along the way, to wait for a good confirmation. So also on my radar, but it's just not ready yet. Pound Canadian, much like the Pound JPY, this one is very much at the top of its range and very vulnerable to both Brexit and improving oil prices. So either one, either a bad Brexit or continued improving oil with an improving Canadian strength, or better yet, the combination of both, could make this one not just slam to the bottom, but go far beyond it. So right now, we have about 900 or so pips from where it is to the bottom of the chart. Those are really low-hanging fruit. So we're going to keep an eye on this one for that opportunity to trade it down. It's going to be either an intermediate or long-term trade. But again, we're waiting on Brexit for that to trigger us in. Pound Swiss, same thing, not as strong a candidate as the Pound JPY or the Pound CAD, since the Swiss is its own little animal and is not affected by as much by being a safe haven, though it is, or from oil prices, which are completely unrelated. So this one may be more of a sluggish mover towards the bottom, but on a bad Brexit, this one will drop. I just don't think it will drop quickly enough, but we'll take that in stride. So if we see a break of that trend line, it's currently following, we will consider a a short trade, a break of the trend line or a crossing of the Ichimoku cloud and coming out on the other side. And that is the end of our charts for today. The setups we see in progress as the week begins, and these are a mix of both short-term and longer term. But of course, we're seeing the pound pairs as Brexit keeps getting postponed, but the end is certainly near. I mean, they can keep postponing and postponing beyond the next month or two. Of course, they could do a complete postponement long term for about 2 years, but that doesn't seem to be in the cards right now. So it looks like Theresa May's government is trying to hammer out some sort of deal that will still allow them to exit the EU on May 22nd, so they don't have to participate in European elections. They've asked for a longer extension, so they do recognize that there's a high possibility that they won't manage to do it within that deadline, in which case they will have to field candidates for the European elections, and they're already admitted that and are in the process of identifying them. But the grand hope is still that they'll manage to do something before the 22nd of May and leave. So we seem to be getting very near the end of Brexit. Once Brexit actually happens and we have stone hard certainties in the geopolitical outlook for Brexit, the pound is going to begin a move in either direction. I'm not going to say the pound's going to weaken or the pound's going to get stronger, but I am saying the pound is going to move, and it's going to be it's going to establish a trend. It's going to either move up or going to move down, and it's going to continue in that trend for at least a few months. That's what we're waiting for a long-term trade, for the uncertainty to go away, whatever Brexit means to actually happen, and then we can take a directional position. For now, we'll continue seeing if we can take some short-term profit off of it, but really we're waiting for that longer-term move. The euro, of course, it continues vulnerable to both Brexit and the EU issues, so it's pretty much a non-entity right now. It's going in both directions, but in general remaining very flat. So the euro pairs are moving more on the basis of the other side of the currency pair, as opposed to because the euro is moving in either direction. So that's actually not bad. That'll probably give us some good short-term opportunities, but it definitely won't give us a whole lot of long-term until something changes. Canadian, the Canadian dollar, of course, needless to say, though I'll say it again and again, oil is undergoing a massive rally, and the CAD has not reacted to that fully. So I am expecting a correction, and of course, that is highly dependent on continued oil strength, which is not a given. But for now, it has been continuing to strengthen from the end of the year through today, and well, if it stops, we'll know, but for now, it is in a very bullish trend that's been going on for 4 months and counting. New Zealand, the Kiwi is at a cusp thanks to recent dovish comments, which interrupted a strength play. So as we saw in that Kiwi, in those Kiwi charts we were looking at, the New Zealand dollar was regaining strength for months at a time, and then suddenly some dovish comments made it stop, and these start going backwards. It's still in limbo. It is in essence sideways right now, and it could break out in either direction. So it's going to be good for intermediate term plays, what I like to call swing trading, or even channel trading. So we'll keep an eye on the Kiwi, but it's not going to be my top fighter, I guess, in my stable right now. But still, it could wake up at any moment. And last but not least, the Australian pairs. The Aussie, as I mentioned, has been going down for the entire 2018, finally achieved some sort of bottom and has been going sideways since the beginning of the year through today. But it is still systematically weak. It's at an all-time low, but that doesn't mean it can't go lower. So the question is, how long can the weakness continue? And when that weakness ends, it's just going to hang out at the bottom, or is it going to start going back up with a little bit of a vengeance? You'll notice that I removed the dollar from our immediate radar. And that's because the dollar isn't doing much of anything right now and much of anything this week. That doesn't mean the dollar can't get stronger or weaker. It just means that I think we're going to have a better opportunity for gains if we focus on these 5 currencies in that order: the pound, the euro, Canadian, and finally the Australasian, the New Zealand, and Australia. Whereas the dollar, the yen, and the Swiss are pretty much in a holding pattern right now and might not be giving us the best opportunities. So we'll see how this plays out as the week begins, but that is my viewpoint as we kick off. We're going to be starting to put a little bit more focus on the intermediate trading, if only because a lot of the charts are at points of either extreme weakness or extreme strength. So the likelihood of them continuing is much lower than the likelihood of them turning around and doing a little bit of a correction before all is said and done. That doesn't mean that a strong currency can't get even stronger. What it does mean is that usually they do take a breather and they do a bit of a retracement between where they are and where they're going to. So it may go up to 1.5, then go back down to 1.2 before heading back up to 1.8. The currencies move in zigzags, and I think all of them right now are zigged, and we're waiting for that zag, and that is the strength of the intermediate term trading, and that we're looking for those, either the corrections or the continuations. We're not looking as much to latch onto the bigger trend. We're looking to latch onto the swings or the zigs and the zags in the charts. So we're going to start looking for some of those. Of course, on the pound, we're going to be very careful, and we're not going to be entering either intermediate or long term until we have a little bit more clarity on Brexit, which is going to continue being critical factor on any pound trades. And as I mentioned, there is an ongoing request right now, which Theresa May is delivering in person to the European Union, to push that out until June of this year instead of Friday of this week. And at the same time, there's little upside to the pound. So there is very little chance that the pound is going to strengthen significantly unless they call off Brexit altogether. If suddenly it comes out that they're revoking Article 50 and that the UK is now going to stay in the European Union for the long term, I would expect market sentiment to drive the pound up, and up. But we'll know about that happening if and when it happens. I wouldn't count on it, but certainly there is that possibility, which again is why we're not going to be entering any longer term pound trades until we have a little bit more clarity. It's just too much chance of something going wrong. But it is time to start looking for those significant moves as the market is on multiple pairs are overextended and are at either significant levels of support or resistance and overdue for some corrections. So that's going to be it for me today. Those are my final assessments, some of it short term, some of it long term. And on that note, I'll open up the floor if anybody has any comments or questions. Okay, in that case, thank you very much. And we will be back tomorrow at 8 p.m. Of course, I will be sending out a summary of this session and the calendar for the week. Thank you very much.